Welcome back. Globally, things are looking picture perfect. Asian markets are trading with a positive bias. SGX on the top of your screen, 5820. Last night, Dow touched a new historic high. Nasdaq closed at a fresh 12-year high. So as we walk into trade this morning, globally globally things are looking quite charged up. So globally, there are some tailwinds, and those tailwinds for sure in the near term will help Indian markets. But the problem is locally the sentiment has reversed. Mid-cap stocks have got disseminated. Local crowd or local traders, they are running for cover, and foreign institutional investors are no longer chasing Indian equities, and dip buys are not there. So local versus global, globally things are okay, but locally we have a problem of plenty. Let me now bring on board Ajay Bodke. He represents Prabhudas Lilladher Securities. Ajay, good morning. Thank you for joining us. Ajay, local versus global, which factor to your mind in the near term will dominate and dictate Indian markets?
I think in the very short term, we are sort of, in my opinion, looking for a marginal upside. Because if you look at some of the events just prior to the budget, we had two minor global tremors, one coming from the US and the other coming from continental Europe. I think the election results in Italy, I think, took the markets by surprise. The fact that whether we would need a second round of elections brought in a lot of uncertainty about in the markets globally. And of course, the sentiment expressed by a section of the US Federal Open Market Committee, some members, that we might see a premature withdrawal of the ultra-loose monetary policy adopted by the Fed for the last couple of years, also led to some upheaval in the market. I think the budget, in my opinion, sort of has made some attempt in terms of reviving investment growth. Although I believe that the concerns on current account deficit will continue to guide the trajectory of the Indian rupee. Also sort of the concerns on BOP and the macroeconomic stability will continue to be the focus area for a lot of investors looking at investments in India. What in the short term clearly has changed is the fact that technically I think the markets had gone down quite sharply and a technical rebound was expected, and also a small corrective sort of a corrective phase in the valuation that happened. I think today, if you look at the Nifty valuations, we are looking at around 441 rupees of earnings for FY 13-14 on the back of 378 rupees for FY 12-13, a growth of 16% in FY 14 and a growth of around 11% in FY 13. So the valuations today we are trading at 13 times 1 year forward. If I go back, Nikunj, and look at the last 10 years valuation of Nifty, the average for last 10 years Nifty valuation 1 year forward is around 13.5 times. So there is a 5% play that is still available in my view in the very short term for the Nifty to move up. And that's why I think post-budget, what we basically said that we will trade in a broad range between say 5,600 and 6,100 to 6,000 at the upside. At the same time, as you rightly said, a lot of good caps saw they were butchered quite sharply, and some of the gains that we are seeing in the broader market clearly are a corrective phase for that sort of short-term plunge that we saw before the budget. But I still feel that the FI flows will be the key determinant of the fate of the Indian markets, and any political and any tremors felt globally, I think, would impinge on the trajectory of Indian markets far more than any other emerging markets, simply because the current account deficit to be announced on 31st of March for the October-December quarter will be quite a nasty figure. That's right, around 6% of GDP.
Fair point. Ashwini, I would also like to draw your attention to some key metals. Ajay, at the current juncture at PL, what are your top ideas? Where exactly are you advising your clients that they should put money to work and it's time to buy fear?
I think on the autos, we are very positive on Tata Motors. Our analyst expects the margins to move up by 100 basis points for the next 12 to 15 months. Strong 12% volume growth. And sort of the launch of new range of Land Rover products is expected sort of to aid the improvement in the top line. So Tata Motors is the stock we're looking at. We're looking at target price of around 316 Tata Motors. Maruti is the second stock we are recommending our investors to look at. On the large cap IT side, we're looking at Infosys and Wipro. The operating environment in America is improving. NASSCOM also has guided at 12 to 14% growth in top line for the companies as a whole, vis-a-vis 10% in the last financial year. So on the large cap space, Infosys, Wipro on the IT side, and on the auto side, Tata Motors and Maruti are what we are recommending.
Tata Motors and Maruti, Ajay, now that's an interesting thought. I mean, they are two opposite ends of the spectrum. One is a local passenger company, the other one is a global passenger car company.
Yes, I think in case of Tata Motors, as I said, a substantial number of their percentage of their revenues and profits simply come from JLR, and our analyst believes that, as I mentioned, the new range of Land Rover products that they have, that they intend to launch, I think will help in a strong improvement in volumes. The product that will be launched will be at a higher selling price vis-a-vis Evoque, and sort of this will aid in terms of a stronger earnings growth. I think coming to the other sectors, our banking analyst is positive on large cap private sector banks like ICICI and Axis Bank. He is still cautious on public sector banks, simply because in an environment of falling interest rates, some of these banks have very large exposure to the corporate book, which gets repriced immediately. On the liability side, obviously, it takes time for them to reprice. And we're just starting the interest rate cut cycle. And even now, if you go back last 3 quarters, we are seeing that there are NIMs that have compressed by around 30 to 40 basis points. So the bottom line essentially is that as we go forward, we'll see a continuing compression of NIMs for these banks.
Right, just stay with us. Do you want to make another point?
Yeah, I think Nikunj, on the coming to sort of the capital goods side, Larsen & Toubro and NTPC is what we are recommending investors. On the cement, CD Cement is what our cement analyst is positive on. He's expecting sort of a strong volume growth in CD Cement over the next 2 years. Company has very strong earnings growth expectations as well as return ratios. On the mid-cap side, we intend to upgrade Mahindra & Mahindra Financial Services from accumulate to buy, and we have just put yesterday a strong buy on United Phosphorus. The company, we are expecting a target price of around 165.70 over next 12 to 15 months, essentially driven by improvement in the top line. The Brazil business is doing extremely well. The working capital cycle, which was a problem, has been identified, and they're looking at crunching the working capital cycle over the next couple of years' time. The product portfolio is going undergoing an improvement from a mainly generic based to product to branded product based.
Okay, let's also get you. Ajay, what stocks do you like from the metal space, and is there anything that you are recommending to your investors right now?
I think Hindustan Zinc is what our metals investor, what we are recommending investors in the metal sector. Our analyst is positive on the fundamentals. Similarly, I think there is a strong belief that the government has in the budget earmarked 14,000 crores of money to be raised through sale of Suti Holdings as well as Hindustan Zinc and Balco. And the belief is that the government will enter into negotiations with the Vedanta Group and ask for a premium for the residual stakes that it holds in Hindustan Zinc. So I think we see a strong upside in Hindustan Zinc, both on the stake sale by the government to Vedanta Group as well as based on the fundamentals. So I think that is one stock we are recommending investors to look at in the metal space.
What about Sterlite Industries? Because Sterlite is the eventual parent of Hindustan Zinc. So if your view is that government will sell the residual stake in Hindustan Zinc back to the Vedanta Group, do you see that could generate upside momentum for Sterlite as well?
Yeah, I think it can generate an upside momentum, but then there are other issues which would continue to dog performance case of Sterlite Industries, be it on their power plant side or be it on their bauxite mining side. Whereas Hindustan Zinc, I think there is no such sort of problem insofar as their core business is concerned. So I think we would still recommend investors to look more at Hindustan Zinc vis-a-vis Sterlite.
Ajay, appreciate your time and thank you for your insights. That was Ajay Bodke. He represents Prabhudas Lilladher Securities. Just to recap,